Iceland has fewer than 380,000 people, about the size of a mid-sized European city, yet the country keeps finding itself in global economic headlines. In many ways, Iceland has become a kind of laboratory for the world economy. In 2008, its entire banking system collapsed. The country's banks had grown enormous compared to the size of the economy, roughly 10 times the nation's GDP. When Lehman Brothers fell in the United States, 3 Icelandic banks failed almost simultaneously, and the entire economy went down with them. But Iceland took a very different path compared to most countries. Instead of injecting massive amounts of money to bail out the banks, the government let them fail. Politicians and executives were even prosecuted, with some ending up in prison. This stood in sharp contrast to the US and much of Europe, where banks were rescued with unprecedented bailout packages. To stabilize the crisis, Iceland imposed capital controls. In practice, this meant people and companies couldn't freely move money out of the country. At the time, it was considered an extreme measure, almost taboo in an increasingly globalized financial system. But it bought the country time to rebuild. The recovery came faster than anyone expected. A big reason was tourism. Once the world discovered Iceland's volcanoes, hot springs, and northern lights, visitor numbers skyrocketed. Within just a few years, the country went from economic collapse to once again ranking among the richest in the world per capita. Then came another unexpected twist: cryptocurrency. Iceland's cheap, renewable energy made it one of the world's centers for Bitcoin mining. For several years, international companies set up massive server farms in repurposed buildings, using geothermal power to fuel the blockchain boom. It was almost ironic. The same country that had collapsed under traditional banking was now a hub for digital money. But Iceland remains fragile. During the pandemic, when global tourism came to a halt, the economy was hit immediately and severely. A small economy like Iceland's is heavily exposed to shocks. At the same time, that vulnerability is part of what makes it such a fascinating case. Smaller economies can sometimes take risks larger nations simply can't afford. This is why economists often call Iceland a laboratory. It has shown the world what happens when you let banks fail instead of saving them. What happens when you cut off capital flows to protect your currency? And what happens when you embrace something as volatile as Bitcoin mining? Each of these experiments would have been too dangerous for a much bigger economy. But in Iceland, they've already played out. Looking back over the past 15 years, it's remarkable to see how one tiny country has symbolized both one of the worst financial crashes in modern history and one of the fastest recoveries. For anyone interested in news and economics, Iceland might be the best place to watch if you want to see the future tested in real time.